We don't have the capacity, nor can we give you financial advice on this program. That's not the purpose of what we're doing here. That requires sitting down with individuals, knowing the individual outcomes of what your age, your risk profile. What we try to do is give you some general knowledge to make you to think, to reach out, to talk to somebody. We want you to understand and know and not be afraid of investing. And one of the things that you always do is you want to have a diverse portfolio. And diversification is many times an overused word, but it's an important word. I tell people all the time, say, well, do I need diversification? Not if you're brilliant and you know everything there is about the market. Warren Buffett doesn't diversify as much as most people do, but he's pretty good at picking companies and knowing what to do with them. So for the rest of us, we need diversification. Let's go back to crypto. People, all the time, especially the young generation, they say, "Listen, it's a great investment. I can get rich by investing in crypto." And I tell them, yes, you can. You can also go broke by investing. And if you want to play that game, then that's good. But that's not investing. That's more on the gambling side. And it's good to invest in. Real estate's good to invest in, but you've got to have portions. You've got to have healthy allocations of those. You don't want to have an unhealthy allocation, meaning you want 90% in crypto and 10% in stocks or whatever that. And everybody's allocation is different based on their age, their risk profile. That's, again, why we have to be very general on the program, but we want you to understand these things. Crypto is a great opportunity. We think it's going to be the future currency coming down, but there's so many different ones. So Bitcoin is just one. There's literally thousands of them out there, and so it's a great way to invest. And there's different ways you can do that through direct exposure to a digital currency. You can just directly invest in that. A safer potential way to do that is in stock companies with exposure to. So there's a lot of ways to do it at different levels of risk. You need to do your research. And I can almost guarantee you that the overwhelming majority of time, in my experience, things I've read, people that I've been exposed to, I think you'll agree with this. If you chase the hot dot or the get rich quick scheme, you're going to lose. You just don't see that happening. It's not the way to invest. So a little bit of Bitcoin, a little bit of real estate, a little bit of gold, a little bit of silver, yes. But you have to, those are hedges, but you have to be careful with those, and you have to make sure that it's in line with your overall allocation of stocks, bonds. I had a individual young man came to me one time, and he said, "Listen, I don't want bonds. They slow me down. The money's made in stocks." And I said, "That's true until the market declines." "Well, no, I want to get them." And so he did. 3 or 4 years later, the market declined, and he came back and said, "I think I'd be interested in some bonds," because he just got destroyed with his stocks. So you've got to balance that. Everybody hates bonds when the stock market's up, and everybody hates stocks when the stock market's down. But you've got to have all of that exposure in there.
And they're different. Some crypto is backed.
Yeah.
Some of it is backed by money or currency, as we know, and some are assets backed, and some are backed by nothing.
Yeah.
Absolutely nothing except the agreement that I'll trade with you and you'll trade with me, and we can have our own little trade exchange. But beyond that, it gets very risky. But it is people. I've noticed, Don, that people have made money with it are people that continue to reinvest in it. The money doesn't come immediately. You continue to build up your cryptocurrency to the point where that when you do cash it in, it has some significance.
And the danger to any advice that you always get is you find people that give the exception to the rule.
Right.
The individual that my friend knew a guy that made $48 million in crypto. That's the exception to the rule. You don't want to live your life following the exception to the rule. Good investing is by making good decisions. You need to learn about crypto. There's a lot of Ponzi schemes in cryptos out there that are out there playing because of how they're set up. You've got to really do your research. You've got to really pay attention. People say, they're not vulnerable to cyber attacks. That's not true. They are. Cryptocurrency exchanges are vulnerable to cyber attacks, some of them. So that's literally one of the risks that is listed when you're looking at it. Competition is fierce. That's a risk. You've got to be careful what you're getting into. There's the product-based things that they're supporting that you've got to be careful of. The technologies that are in them many times are volatile. So you've got to really do your homework. And then the big one that we're waiting for is regulations. We don't know what regulations are going to hinder. So it's not to say that you don't invest, but people ask me all the time, if you were to pin me against the wall and say how much, I would say 1%. That's what we recommend in most people's portfolio because it's just an unknown variable. If it takes off, you'll capture some of that growth. If it falls apart, you don't lose. Now, that's in a retirement portfolio that we normally don't recommend more than about 1% because it can just be too volatile or too dangerous. It's a good hedge. You'll capture it if it goes up. But there's a lot of unknowns. It's not that we're scared of it, and we don't want, but you've got to be cautious and wise in how you invest in those things. It's a big thing for today. It's going to be here. There's so many things we don't yet know that we'll see unfold. People ask, is that the next? That's probably the next currency. And as secure as it is, it's got a lot of potential. But always caution people: don't chase the hot dots, no matter how much you want to and how much you read about somebody making millions of dollars. Use discipline in investing. That's the best way to get to where you want to get, because on the other side of that, there's a lot more stories of people who blew up and didn't, and then they've got to start over and they're behind. So just remember to diversify and spread that out and spread your risk in a variety of things. Talk to somebody that can help you do that. I hope that you will continue to send in your questions. They mean a lot to us because we can talk about a lot of things, but what we really want to do is find out what's important to you, the level of understanding, the questions that you have. So hopefully that we can add value to your investment knowledge and that you can increase and grow in that and stay curious and read as much as you can, get as much information. But when you have a question, please feel free to just send that in to us. Send those questions in because we really do enjoy them, and answering them helps us to make sure that we're being relevant and pertinent to you.